So I guess first, Swizz, you want to introduce yourself at all, or for anybody who
Yeah, I
doesn't
guess
know
I
you?
can. Yeah, I started trading CANSLIM in actually November of 1997. So some of you guys, I don't know, you might not even be that old, but yeah, I started it in 1997, and of course, I just happened to be at the right time, the right spot at the right time because the internet boom really took off in 1998, 1999. And of course, I was making money like everybody was, and I thought I was a genius because that old saying how bull markets makes everybody think they're a genius. But unfortunately, I learned the hard way that I was not a genius because when the dot com crash happened in 2001, 2002, I basically lost 75% of my portfolio. I mean, I got crushed. And what was so crazy about that was I I actually got out within, I don't know, 2 or 3 days of the top. And not because I was doing anything special. I was just reading Investors Business Daily. I think it was called Investors Daily back then. And they were following, the distribution days and that sort of thing. And I was just reading what they were saying. And they said, okay, we've got 5 distribution days. We advise people to, get off margin, raise cash. So I just sold everything and got in cash just because I read it from IBD, not because I knew anything. My problem was that I had never experienced a bear market like that. The only bear market I had experienced was the one in 1998. And even though the NASDAQ, I think it fell maybe 30% during that time, it only lasted, I'd say, 3 months at the most. So it was like, okay, we had the 3 months, it fell 30%, we're off to the races again. And in my mind, I thought the same thing was going to happen again. I thought, okay, sure, we fell in April, we're going to fall in May. I think there was maybe even a follow through day, either in, I think it was in May, late May, and we'll be off to the races again. And sure enough, that's not what happened. You had a few good months, but then it just kept falling. Well, it kept falling. I said, well, it can't fall anymore, so I'll just buy here. Well, then I'd get stopped out and lose money. Then it falls some more. Okay, surely now there's no way it can go any lower. So I go in again. I lose again. And I just kept doing that over and over and over again. And I kept losing, 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 losing. Now, if I was just paying attention to CANSLIM, I would have realized that leaders had not set up. The market was in a downtrend. So why in the world, every little update that I saw in the market, I thought, okay, this has got to be the bottom. And I would just plow into the market. And I just kept getting killed. And finally, after losing all that money, and seriously, I still remember the day I was 32 years old and I literally started crying because I grew up in a poor family, very poor. And so me making that kind of money in the dot com bubble and then losing that kind of money in the dot com crash, it was just, I couldn't believe it. I said, oh my gosh, this dot com bubble was the greatest opportunity in the world to make just loads of money. And I've basically screwed it up. And I couldn't believe how I screwed it up. I said, this is going to be this is going to be the chance of a lifetime. I mean, it'll never happen again. I'll never be able to, go through markets like that again. And and I was so silly. I was just a young kid. I called myself a young kid back then when I was 31, 32 years old. But there have been so many opportunities to make incredible amounts of money since the dot com crash. I mean, we've had just amazing, and I think that's what CanSlim does for us. It gives us the tools to be able to take advantage of those periods in the market where the money just rolls in. Now, there's going to be times when the market's going to be tough too, and you're not going to make any money. Or at least I'm not going to make any money, but that's okay. Just all you got to do during that time is don't do like I did in the dot com crash, trying to pick every little bottom. Just play defense. Play defense. Keep the money that you made. because there will be another opportunity. There always are. There's always going to be more opportunities. Even if you played these last 2 years badly, 2024, 2025, it's okay. You learn from them, and then you'll do great the next time that we'll get another opportunity like we just got. So, I mean, there's always going to be opportunities for us to make money if we're following the CANSLIM method. And I know other methods work fine, but I don't know those methods. The only method I know is the CANSLIM method. That's the one that's made me money. That's the one that's allowed me to be a full-time trader now. I don't have a 9 to 5 job anymore. I just trade CANSLIM. And it gives me a lot of freedom that I can go wherever I want, do whatever I want, dress however I want. Sometimes I'll be in my PJs trading stock because I can do that. I can do whatever I want to do. And I think that's one of the greatest things about being able to trade full time is that that you get the freedom to do whatever you want, whenever you want. And I think that's pretty cool. Besides, having to listen to your wife or your kids, I mean, pretty much anything else you can do. And so I'm not married, so I'm okay. So yeah. Anyway, that's and I've over these years, I've like I said, I'm just trading CANSLIM for a living now. So that's pretty much what I've been doing over the last, I don't know, since 1997.
Cool. One of the questions I had, and just uh, like from your trading experience as a CANSLIM trader, right? We talk about those uh, good periods and those times where you're kind of just, all right, I'm just preserving capital for when that next good period comes around. Um, how often do you see, like, if you had to look at in the last 10 years, do you see like 2 years that are good, 1 year that's bad, or 2 years that are good, 3 years that are bad? Like, from your experience, I guess, looking around back to 1997, like those strong periods versus those tough times, like what does that look like? Because I think that's a big concern for a lot of people with CANSLIM is they're like, well, it's great I can make a lot of money when things are doing good, but then, well,
Right.
what about how often is it bad kind of thing? I know a lot of people have that concern.
Yeah, that's a good question. And it's really you kind of. I think the way you answered it is pretty close to the way I would have answered it. I do see it's a lot of times it's 2 good years, one kind of rough year. I just remember things like I remember like for me, 2011 was a rough year. And 2012 was okay, but 2013 was just awesome. 2013 reminds me a lot even of this year, where even if we get a correction, it's only 3 to 4%, and then you reverse and you go up higher again. And it was like that in 2024, I thought. And so, like, I remember 2017 was a good year. It's like 2013 was a great year. 2017 was a great year. After the COVID correction, actually 2020 was a really good year after April of 2020 for that next year or so. So it seems like about every 3 years you have like a really good year. Then the other year is like it's a good year, it's okay. Then you'll have like a 2022 where 22 was uh, a bear market where that lasted a little bit longer than we've seen lately. But it was one that it wasn't to me. It wasn't devastating like the 2008 2009 financial crisis or the .com crash. It just seemed like 2022 was just it was like Chinese water torture. It was just like drip 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 drip, and you just like oh man, just when was this market ever turn? And it just kept going down and down and down. But it wasn't like it fell 50%. It was more like, okay, it fell 30%, but it was 30% over a year.
Mm-hmm.
And yeah, and that's kind of how that unfolded. But the thing about it is, the way I look at these down drafts in the market, bear markets, I don't look at them so badly. Like, okay, well, this is doesn't look like I'm gonna make any money this year. I don't look at it that way. I just say, well, you never know when the next bull market's going to be, when it's going to start. So you just always got to be ready and just keep doing your routine, and and you might feel like doing your routine's a waste of time. Like, oh man, this market's so terrible. Why am I wasting my time over the weekend going through these charts? But I will tell you, in my experience, when I start getting that feeling like this is a waste of time, I should be playing tennis right now. Uh, that's the time that it's so weird. It's almost like, okay, any week now it's getting ready to turn, because you feel like, because I'm feeling like that, I'm sure a lot of other people are feeling like that too. So that negative sentiment is so pervasive that it's almost like, okay, just any time now, any week now, we're getting ready to turn. But you don't realize it at the time, because you just feel like, oh, it's a waste of time looking at all this stuff.
Yeah. Yeah, I can agree with that too because I've seen, this was a perfect example of a year that I felt like that, right? I'm like how brutal it was, and at one point I'm just like, this has to get worse. Like this is a big drop. This tariff stuff, nothing's changing. I'm like, I'm looking at these charts. I'm like, how's this thing really going to turn around? And right as I was getting that feeling, it turned around.
It does. It's crazy how it's so weird how it happens.
And you know what, too? One of the things I've noticed is when I'm more in tune with what's going on during those bear markets, the turnaround is just so much easier. Like as things turn around, it's just much clearer as it's happening, like where I want to put my money because I'm more in tune with like, oh, this just got annihilated, and like, oh, this has been showing a lot of strength. This has really been holding up. Like this is where it looks like they're keeping their money. Um, so I've seen that pay off for me at least a couple of times where I think that um, it's hopefully we'll see what happens next time, but it ingrained in my head enough where it's like, remember, like this is going to pay off at some point.
Yeah, that's right. That's so true. I remember even at the financial crisis at the bottom back in, I guess it was around March of 2009. And and IBD still does the 85/85 list. But back then at the bottom, there were only, I want to say, and I still got the newspaper article. Uh, there were only 6 stocks that made it to that 85/85 list, which is ridiculous because that list will even grab stocks that trade at that time, say 10,000 shares a day. So I mean, it grabs everything, and
Mm-hmm.
of everything that it could grab, all it could come up with were 6 stocks, and about 3 of those stocks were these little 20,000 share day, volume stocks, so they're a waste of time anyway. But the ones that had liquidity that institutions could participate in, Netflix, Green Mountain Coffee, and I want to say Teva Pharmaceuticals. Well, my goodness, you only how off. I mean, how could you miss these? I mean, there's 3. You only have 3 to look at, and it was Netflix and Green Mountain Coffee and Teva Pharmaceuticals. Teva did okay, but of course Netflix and Green Mountain Coffee, they just knocked the cover off the ball, and they did incredibly well. They were model book stocks, and and I ended up getting to Netflix a little bit later, but I got into Green Mountain Coffee back in April because it was just like it was hitting you across the face. Just like you were saying, Bobby, here's some stocks that were actually hanging in there, trading within, say, 10-15% of their 52-week high after the market just got demolished. And here's these stocks just hanging in there. And so there must be something up to them. Plus, they've got the liquidity, they had the earnings growth, they had the sales growth, they had the story, they had all the CANSLIM characteristics, and they were coming out of basis. And it was just like, oh wow, what a cool thing. It was just so easy. I mean, you didn't have to look through 100 charts to find those diamonds in the rough. They were staring right at you because the market had gotten demolished so badly. Only a few stocks were still hanging in there.
Yeah, it like I always say, like sometimes you at certain points, like even a little bit right this current point, I'm like, ooh, a nice correct, like even a just 20% correction, real quick one would be nice because it just makes things a lot easier.
Oh yeah, I would love for the market. I always like the market for the market to correct
Yeah.
because I know that's when the best bases get built. So
Yep.
I'm always for that.
Uh, so one of the questions that I forget who exactly asked it because I have a separate list, but was just curious, like what got you started in actually trading, or like what gave you that initial inspiration to even open up an account and start trading? And then I guess my follow up question is then what led you to actually cancel them? Like how did you find cancel them?
Really, I've always been interested in the stock market. Even when I was in high school, they used to have these little stock market competitions in high school with like play money, and I just loved it. And instead of the other guys were reading the sports pages, and I did that some too, but I was mainly reading looking at the stock quotes, looking at the finance section. So I've always been interested in the stock market. Of course, I didn't have any money, so all I could do is do paper money. And when I finally got a job, I says, you know what? I'm going to just start. I'm just going to go to the bookstore and just start just buying books about the stock market and start reading them. And I had never heard of William O'Neill, so the first books I bought were Peter Lynch and Warren Buffett, because everybody knew who Warren Buffett was, and Peter Lynch was the Fidelity guy, and those are the two guys that they talked about when I was in college. Ain't nobody in college ever talked about William O'Neill. I didn't know who that guy was, and so I'm just so I read the Warren Buffett book, I read the Peter Lynch books, and I just go back to the bookstore and I see this how to make money in stocks, and I just open it up. I kind of flip through the pages, and it was amazing. It's like, for me, I'm like a checklist type of guy. I like to see 1, 2, 3, and that's the way that book was presented to me. It's like, oh, this little acronyms, CANSLIM. Oh yeah, I see what the C means, the A means. Okay, I got that. Oh, that's interesting. Cutting losses at 7-8%. I've never heard of that before. Buying all-time highs, buying 52-week highs. Everybody's telling me that I need to be looking for value, not to be buying at 52-week highs. So this guy was saying all this stuff, and it was just like, this is so cool, because I've never heard this before. It was just like so cool to see this, listen to this, or read this other viewpoint of how to approach the market. And then when I hear the guy's like a billionaire, I'm like, okay, he's not only a guy who's writing the book, he's actually made the money, so he kind of knows what he's talking about. And so I got into it, and it was just, I thought it was just so great the way it was laid out. And then from that point on, the first stock I bought was, I still remember it, Timberline Software. And I bought that stock in November of 1997. And I was still being influenced by Peter Lynch, buy what you know. Well, Timberline Software was an accounting package for the construction industry. Well, I was an accountant back then, so I kind of understood what was going on with this software. I was using other software, but I understood what they did. And I bought that stock, and it doubled, and I sold it. And I didn't make much, like dollar-wise, I made maybe $1,500. But to me, it's like, whoa, I can double my money using this method. And I bought the cup and handle. I was really trying to follow what the book said. And I saw that I doubled my money, even though it was a small amount. And I thought, wow, this really works. This is great. And I was hooked from that point on. Even though when I started losing money, I was still hooked. It's like, this has got to be, this is it.
Yeah. What's cool too that I think about is, like, one of the things I've always thought about with CANSLIM is everybody else, value investing, the buy low, sell high, of like, essentially buying down low in the dips, not like buying low and then selling high like we do. But, and everybody does that. Yet nobody seems to make money, right? The average person, most people that talk to, they're walking around, they're following all these old adages, they're following what these people say and that people say. Nobody makes money. And then you find somebody that's doing something completely different like you did. And you're like, why? Well, nobody's saying this. Like, maybe I should look at this, because nobody else is making money and nobody's looking at this guy. Maybe this guy knows what's going on. So I think that's pretty interesting, just the way you came across it,
exactly. Yeah.
All right. Then I just want to see what people are writing in here too. So I'm just going to go through some of like the macro stuff, and then we'll go some of the more detailed questions. So it said, what were the biggest mistakes, lessons you learned along the way? I know you kind of mentioned, obviously, the 75% drop being a real big. I'm sure that's probably one of your biggest mistakes or lessons that you've gone about. Is there anything else that, like, another mistake or lesson that you've learned over these years that you think is worth telling people about?
Yeah, I'll tell you a good mistake. It was something I continue to struggle with, even when I was sort of turning the corner and started kind of making money, but I still wasn't doing that great. I did not realize how important, like for me, when I first got into it, I'd see a cup and handle or flat base, and it goes to a new high, and I would just buy it. But what I was not really doing was, I wasn't considering the tightness that maybe formed before the standard buy point. Like there was maybe some tightness that was maybe 5%, further down earlier in that base that I could have been buying, and I could have gotten a better price and that sort of thing. And the light bulb really. Oh, another thing that another mistake I was doing was. It's so crazy because I'd read that book multiple times, but still there were concepts that just I don't know. I just wasn't getting, I guess. But the importance of buying a stock that has made a base that is formed after a strong prior uptrend. I would just look at the base and say, okay, base, there's a base there, breaks out, I'm going to buy it. But what was happening was I wasn't really buying the leaders because the leaders had these really strong prior uptrends before that base formed. I was just buying any old base. I said, it's a base, I buy, and I wasn't really emphasizing the importance of having a very strong prior uptrend. When I started doing more of that, I started picking better stocks. Another thing that I was doing was it seemed like another thing that I was doing a lot of, like the leader would break out and I would always miss the leader. But the second stock would break out and I would get that one. And I thought I was doing okay with the second stock, but the leader would go up like 100% and my stock would go up maybe 20, 30%. So I would make money, but I wasn't getting my money in the leader. So that was another mistake that I made. And I'll tell you another mistake that I was making in 2003 after being so psychologically damaged through that 75% drawdown. I'll tell you something that with me, what I was so used to losing, just lose, that when the 2003 bull market started, I would buy stock. And I had some stocks that really turned out to be incredible winners, but I didn't hold on to them during that time. What I ended up doing was, oh, it's up 20%. Oh yeah, I know it went up 20% in 2 to 3 weeks, but I know the rule. The book says that I need to hold it 8 weeks. I'm not doing that. I hadn't seen a 20% gain in months. I'm going to take it.
Take your money and
I
run.
was doing. I'm taking my money and running, and it was so crazy. I would buy these stocks. I mean, I still even remember E-Research. E-Research was, I think it ended up going up 400%. And I got like a 25, 30% gain out of that thing. And I never did get back into that stock because it was like, it just kept going. But here I was so happy by getting my little 25, 30% out of that stock. And that was happening to me a lot. Ameritrade, eBay at one time, I had that stock. And where, Bill O'Neill made a ton of money on eBay. Here I was, little old Steve Swetz. I'm making my little 25, 30% gain and thinking, oh, wow, I'm doing great. And so I had to get over that hump of like, okay, yes, you've lost a lot of money. You've really messed up those 2 years, Steve. But now that you've got this bull market going, don't be so scared. It took me a while to overcome that fear that I know a lot of people have it, fear of losing profits, fear of taking big losses, fear of this, fear of that. Well, I had such a fear of losing because I was losing so much that I was willing to do anything to prevent myself from losing. If it meant taking small gains, then so be it. I took small gains just so I wouldn't feel that pain of losing like I'd been doing for 2 years. So that was something that I had to overcome. But once you started getting confidence, like, oh, okay, that's working, and then this was working, and you start getting more confidence in what you're doing, and you're starting to understand the method more. You're writing down your rules. You're doing things like that. You're doing like a consistent routine. You're starting to really, operate as a trader like it's a job. Like, hey, these are things I got to wake up at this time. I got to do these things. I got to look at these things. I've got to mark my charts up. I got to take notes. I've got to reread books because I'll forget stuff, and I got to make sure that those concepts are firmly in my head. And it's almost like going back to school, and you're reading books, and you're taking tests, and you're doing all these other things. So you're learning that subject material, and you're able to apply it in a real life, scenario. And I was approaching it that way, and finally it started really paying off.
Yeah, and I like the way you think about that too. It's like you have to do X, Y, Z, like all the prerequisites if you're gonna actually,
Yeah,
be able to
I'm a checklist guy.
execute.
I love
Yeah.
check. Yeah, I'm a checklist guy.
So that kind of ties in because I know you kind of just mentioned there was a couple of questions I guess about your kind of day to day. One of the first ones was, I guess, was what time of the day do you trade in front of the computers, or like, are there specific parts of the day where you're sitting in front of the computer, or are you even sitting in front of the computer? Like, I guess, what's your day to day look like as a trader, time in front of the screen type of thing?
Yeah, I'm. I would never make it trading on the West Coast because I'm not a morning person. I would be homeless, living under a bridge probably if I had to live if I
I'm
had to
right.
trade from LA.
I'm right there with you.
But but in Mississippi, I'm in the Central Time Zone, so the market opens at 8:30. So when the market opens at 8:30, I'm usually up about an hour before the market opens. I could be up a little bit earlier if I've got a stock that I own that's going to report earnings that morning, because I want to be up and see how it responds to its earnings report. But for the most part, after usually from 7:30, I kind of all I do is I look at the futures. I just want to see if it's up or down. I don't. I'm not looking for anything like a specific level or anything like that. I just want to get a feeling of how the market's going to open, and then I'll check as far as my stocks go if there's any news on my stocks. But I really don't pay attention to that much because I really don't look at the news that much, except for earnings reports. And I certainly don't look at analyst upgrades and downgrades. But what I'll do is I'll wake up, I kind of do that, look at what the futures are doing, look at my stocks, where they might be opening, and then I'll look at my alerts because I'll have alerts that I'll have set to like, hey, if this stock makes it to this price, uh, maybe I need to, do something. And then I'll have some orders out there. I can have some buy stop limit orders, and I'll do that sometimes. I'll put buy stop limit if I've got a stock that's already set up. I've already identified the pivot point, and it says, okay, if it goes to this pivot point, I'm going to put a buy stop limit order in and let us do its thing. And if it clicks, if it triggers that order, then I'll get I'll see it on my screen, and then I'll go in there and I'll immediately put a stop loss, a good till cancel stop loss, order in. I mean, I'm talking about within seconds of me getting that the buy stop triggered. So I'll do that, and I'm doing this, and maybe for the first hour from 8:30 say to 9:30, I'm just looking at my alerts, orders, making sure everything's good. Then I won't look at the market until maybe see the market closes at 3 o'clock here, so maybe 2 o'clock, 2:30. The only time I'll look at it between those times if I've got an alert that comes on. It's like, hey, your such and such stock fell to this level, and I've always got my iPad with me, so I can always open up my iPad and put in the ticker symbol and see if I need to do anything. And a lot of times on something like that, my alerts are there just to kind of like just make me aware of something, not necessarily make me have to
Take
make a
action.
trade. Just say, oh yeah, it's just okay, it's at this level. Okay. A lot of times, like I'll put an alert at where the 20% profit goal is. I say, oh, stocks hit the 20% profit goal. Um, do I need to sell some, or maybe do I just need to tighten my stop on like half my position below the day's low or something like that? But I'm just doing. I mean, I'm not. It doesn't take this that long to do this stuff because, well, I've done it so long. You kind of get in a routine, and also it's not like I own a bunch of stocks. A lot of times, okay, I've got maybe 8 stocks, maybe 6 stocks, 7 stocks, something like that. And a lot of those stocks, they're just doing their own thing. I'm looking at weekly charts, so I'm not even worried about what it does on a day-to-day basis. And so these alerts that I put out there, they don't trigger very often because these alerts are if something like the stock really, I mean, it has to fall pretty hard on a given day for when it's like some of these alerts trigger. So, because most of the time I'm just looking at weekly charts, and as long as that weekly trend is up, then I'm not doing anything with the stock.
Yeah, that's cool. That's a nice, because I think especially today we're seeing a lot more like day traders, swing traders, uh, hearing what you how your approach is to the market, and it just seems a lot more peaceful, a lot less
It
of
is.
chaos, you know.
I think it is. Now, look, these swing traders and day traders, I know some of them, they do very well.
Yeah.
And I'm not, so I don't want to ridicule what they do. I'm just telling you, I can't, to be honest with you, I don't think fast. I'm like a methodical type of person where I've got to, like, I'm a checklist person. Oh, it's got to do past this, it's got to pass this. So I'm not a guy who can, like, watch 5 minute charts that much. I do watch them at the very beginning of the day for a particular reason. But after the first hour, I'm ready to go play some tennis. I'm ready to go get on my bike. I'm go ready. Well, my nephew's playing. He's in school right now, but like during the summer, we'll go out and play baseball or play tennis or something like that. So I'm doing stuff like that. I mean, to me, I'll walk in the park or I'll go. I used to be. Well, I'm still a CPA, but I don't really practice as a CPA. I just don't have the license. But I've got friends who are accountants, and we'll go out to eat lunch together. I'm not worried about what my stock is doing. I remember one time I was eating lunch, and some of my friends, they know I trade for a living, and they knew that Powell have an FOMC. He says, well, why are you eating lunch with us? Don't you need to be in front of your computer to look at the FOMC and see what's going to happen? I said, man, I don't care what that dude has to say about interest rates. Unless it triggers a sales, one of my sell rules, and I don't have very many sell rules. What do I care what he has to say? I says, pretty much, I mean, this is, I thought you got to be in front of your computer and watch all this stuff. I says, man, I don't have to watch any of that stuff. And they were surprised that they thought just because I trade for a living, that means I have to be in front of my computer all day long. And you don't have to be in front of your computer at all. The only time, and to be honest, and I'll even say this, there's some days I don't go to the computer at all because I'm already fully invested. So I don't have any stocks like that are on my buy list to buy. So there's nothing to do there. My sell stops are set in. So if something triggers, my sell stop will probably kick me out, or if an alert happens. But like I said, my alerts don't ring off that often. The only time they really ring off often is when I'm trying to buy something. I'm looking at a price level and that kind of thing. But when it comes to selling, they don't trigger very often at all. So all I have to do is wait until Friday and then look at Friday's weekly bar just to see where the stock is going to close and if I need to move my stops at all. But that's really Friday is really the only time. But unless I'm buying something, and I'm not going to be buying anything if I've got a fully invested portfolio. The only time I've got to really make a decision is on a Friday. Which is very cool.
Yeah, it's really cool. And now, so like, do you do any screening on a daily basis, or for the most part, like because you're buying so much of a weekly chart, like your screening is really just done on the weekend, and your daily is just a matter of managing what you've already the work
Yes.
you've done.
The only thing I screen on a daily basis is I've got like my version of stocks on the move. And it's a really simple screen where I'm looking for stocks that have at least 60 million average dollar volume, where they close 5% or no 4% higher on volume that's 100% above average. And not that many, unless the earnings report comes out, not too many stocks meet that criteria.
Mm-hmm.
Maybe 10 stocks meet that criteria. And I'll just maybe at the end of the day, I'll go through those and see if anything, because that's about the only way a stock can make it to my universe that hasn't already made it over the weekend, is that screen. If a stock does not meet or does not go through that screen, meet that screening criteria, then whatever stocks that I started with over the weekend, that's my universe for the rest of the week until next weekend when I do it all over again.
Yeah, that's cool.
Yeah.
And then because then the follow-up question to that was kind of like, what's your weekend routine, right, look like? Obviously, it's going to be much more intensive because that's where the majority of your work is being done. What's that look
Yes.
like?
Yes. Basically, every Saturday night, or almost every Saturday night, is pretty much when I do everything. And all I do there is I run 5 scans. And kind of the way I run my scans, I actually run it off of Excel. What I'll do is I'll take the whole market surge database and I'll just dump it into an Excel spreadsheet. And then what I do from there is I'll do one simple screen, which is stocks with average dollar volume of at least 150 million, and the relative strength rating is at least 90. Well, that's one screen. I have like prices got to be above $10 and some stuff like that. But and the stock has to be trading within. And I'll change this depending on how the market is. If the market's really strong, I'll use like minus 20%. If the market's going through a bear market, I might use minus 40%. It just kind of depends on the condition of the market, which will control what kind of percentage off 52-week high criteria I use. So that's one scan, and it'll get about 120, 100, somewhere between 100 and 120 stocks.
Okay. Yeah.
Then
I was going to ask that.
Yeah, and then I got another scan that it looks for stocks with an average dollar volume of at least 20 million. But the thing about that is it's got to have both at least a 90 composite rating and a 90 relative strength rating. So it's a tighter screen in that it's got to have more. It can't just have a 90 RS rating. It's got to have a 90 RS rating and a 90 composite rating. So, and then it's still got to have the price and some of those other, it's trade within, say, 20, 25%, 30% of the 52-week high. And that screen will get me maybe 100 and something stocks. But a lot of those stocks are going to be in both screens. So what I'll do is when I merge these screens together in like an Excel spreadsheet and then copy and paste these into Market Surge, when everything's said and done, I'll get between 250 and 350 stocks almost always. And that's my universe. Another screen that I use is, and this is the reason I do it in Excel, because you can't do that in Market Surge, is that I can find stocks that have traded 1 year or less. And the reason you can't do that in Market Surge is, you can put in the IPO date, but you can have stocks that are spin-off, that are SPACs, or something like that won't get reflected in that screen if you're running in Market Surge. However, in Excel, you can one of the columns is percentage price change in 12 months. Just change that to like a dash there, and there are some dashes there, and it's all of that the dashes do or represent stocks that have traded less than 12 months. So it'll grab you, it'll give you all the ones that are traded less than 12 months. It's usually like 30 stocks. It's not many. And so I take that screen, and there's another screen that I run that's proprietary. Because what I've done is I call it the Swetz score. And all it is there's about, I don't know, maybe 20 variables, but I'll weight them differently. Like, for instance, a stock that's got an EPS rating of 90 gets a higher rating than a stock that's got an EPS rating of 80. So what it does, it looks at all those CANSLIM criteria, but it weights them based on how strong that stock is at meeting that criterion. For example, another example would be, okay, you got a stock that's growing their earnings last quarter 25%, but then you compare that to a stock that's growing its earnings at 100% in the last quarter. Well, it should get a higher rating because it's growing their earnings at a faster pace than the one that's growing their earnings at 25%. So I've got this little formula that I've got. It weights all this stuff. And then if it gets a Swetz score of 25, then it gets selected. And so once like I said, put all these 4 or 5 screens together, then I'll come up with a list of 250 to 350 stocks. And that's my goal, because there's about 6,000 stocks. I'm not counting ETFs. There's 6,000 stocks in the Market Surge database. And so, you always hear me talk about, I want the best of the best. So what I'm trying to do is take that whole universe of 6,000 stocks, and I just want the top 5%. So 5% of 6,000 is 300 stocks. So that's basically what these criteria are designed to do, is get me the top 5% of those 6,000 stocks. So then now, since I've got now the top 5%, all I do and I do this all the time, on a weekend, I'll have one screen that's got my weekly Market Surge chart with and I always keep it open to the institutional ownerships. I always like to see what institutions own the stocks that I'm going through. And then on another screen, I have a monthly chart. Monthly charts are very important to me. And then on another screen, I've got a daily chart. I only look at that daily chart until the monthly chart and the weekly chart look okay. And all I'm doing is I'll sort it by industry group rank. So industry group rank number 1 goes to the top. Then my second sort is the relative strength rating. So the company is in the top industry group that's got the 99 RS rating. And then I'll sort it by composite rating. So that's my 1, 2, 3. And I do this the same way every weekend. It's the same routine. And sometimes I'll monkey around with the screening a little bit, but not by much. Because in my experience, these screens pretty much catch anything I want to catch. And so all I do is once I've got these 250 to 350 stocks, and you think, oh my gosh, how are you going to look at that many stocks? Really, all I do to begin with is once I've got that list of stocks, I've got the layout like I want, I'm just hitting the space bar. And all I'm doing is I'm looking for if that stock is either if it's in a base, then I want to make sure that's got a strong prior uptrend. If the answer to no is no to either one of those questions, I'll move on to the next chart. I don't care about counting the accumulation weeks, distribution weeks. I don't care about the fundamentals yet. I don't care about any of that stuff. All I want to know is that stock in a base? And if it is, was there a strong prior uptrend before that base formed? And if I can't answer yes to both those questions, I'm off to the next chart. So I can flip. I'm going through those charts fast because a lot of times you'll have a stock. I'm just pulling up. I've got it right here on my charts here. I was going to say I'll pull up the very first, my leaders universe. Okay, the very top stock, is SanDisk. All right, you pull up SanDisk, weekly chart is extended. So you're off the next, you don't even care. I'm off the next one. Okay, Micron Technology is extended. Move on to the next one. And I'm just doing it that fast. And I'm just hitting that space bar. And then all of a sudden I'll come across one. I'm going through it pretty fast. Oh yeah, okay, here we go. Light. Light came across my, when I was doing this last weekend, Light came across because it had gone sideways for about 4 weeks. It had caught up to its 10-week moving average. So all I do, I just and it had a really strong prior uptrend before it did that. So I said, okay, I'm just going to flag it. So I'll flag it on Market Surge. And what's so cool about Market Surge is it'll keep those little flag symbols all in one little folder for you. You don't have to create it yourself. It does it for you. So I just flag it. So I'm off the next one. That's all I'm doing is just flagging. And then once I flag the ones that are in bases, they have the strong prior uptrend, then I start I start asking those 4 questions that I've mentioned before. If I can't answer yes to 3 of those 4 questions, then I just unflag it and move on to something else. But those 4 questions are, does the average dollar volume is at least 150 million? Question number 2 is a stock coming out of a first or second stage base? Question number 3, does a stock, is it providing like a new product, a new service, something new, a new revenue stream? Is it a household name? Is it a young company? More of those variables, the better. But if it's got any of that stuff, then that's one of the questions. And then the 4th question is household name. Does it have excellent fundamentals? And what I mean by excellent fundamentals, I'm talking about stocks that have those really strong quarterly and annual growth rates in their sales and their earnings. They have accelerating quarterly or annual sales or earnings, and they've got either a high EPS rating, a high an A SMR rating, a high return on equity. I know the book says minimum 17%, but I'm looking for like 20-25%. But I'm just looking at it. I've looked at these, I've looked a million of these things. I can look at it, in Market Surge, and it's so great because the weekly chart has all that stuff in the panel on the left. Look at it real fast within maybe 10 seconds and have a really good idea whether these are excellent fundamentals or not. And so if it does, then I keep it flagged and I can move on to the next one. And I can go through that process. And usually by the time I get to the flag stocks, I'm looking at maybe 20, 30, 40, maybe 50. So it's not like I've got to spend that much time on a lot of stocks. and I can answer those 4 questions pretty fast in my head. As long as 3 of those 4 questions I can answer yes to, then I'll keep it flagged and I'll move on to the next stock. And then at the very end, I might have then I'll start placing my alerts and determining, okay, where's the pivot point at? Does it have a buy point? Can I buy it the next day if it breaks above this pivot point? If I can, I'll go ahead and put like a buy stop limit order in and let the market just take care of it for me. And I've already got this whole plan figured out, like how many shares I'm going to buy. If it doesn't work, where my stop loss is going to be. I've got all this figured out before the next day. I usually do it the night before. I'll just look at my list of these stocks. Maybe after I've got done, going through the, flagging, unflagging stocks and getting down to my, say, 20 or 30 stocks. Those are the only stocks I look at during the night, is those 20 or 30 stocks. And then I look at the stocks on the move, which could be maybe 10 or 20 stocks. And then sometimes what I'll do is from that universe, I'll run stocks that are like within 5% of their 21-day exponential moving average. Because maybe what's happened is over the weekend, they weren't in a base or anything. But as the days have gone on, maybe they've created maybe a 3 or 4 day handle and they've gotten pretty close to that 21-day exponential moving average. So then that kind of comes to my attention to allow me to say, okay, maybe now I've got a chance to buy this stock, not on Monday, but maybe like on a Thursday or something like that. So that's basically all I do. It really, once you get like I've done this so many years that, it's almost like you don't even think about it. It's like, oh yeah, you do this, you do this, you do this. And oh yeah, another thing I do every night is I update my my spreadsheet. I keep a journal. So if I make any decisions on a stock, whether I sold it, whether I bought it, that sort of thing, I make sure that I journalize that. And I've even got another little spreadsheet that I'll even, if I'm emotional about something, oh man, I felt scared today because like DeepSeek that day, I felt scared, a little bit scared that day. I got to admit, it's like all my stocks are getting killed. Yeah. And I'm thinking, and so I just wrote something like, I'm feeling emotional. I'm feeling tense. I'm starting to feel stress. I want to verbalize that stuff because, maybe 6 months down the road, you don't know how you felt that day. So if you can write down those feelings that day, and I can go back, and it's funny, I can go back and look at my journal, say from 15 years ago. I had a lot more scared days, a lot more fearful days back then than I do now. I don't actually these days, I don't put that much stuff in my journal as far as the emotions go, unless like the DeepSeek thing that rattled me a little bit. I got to admit.
Because I had people.
Yeah, it did. That's like, wow, what's going on here, man? And it just like this sucks. But yeah, that's kind of how I approach things. I think the bottom line is if you keep a journal, keep track. It's very important to keep track of all your trades and the reason you bought it and the reason you sold it. And make sure you have a written set of sell rules. They don't have to be complicated. I've only got 7 sell rules. And I think if you do that, then if anything, at the end of the year, you've got something to look at so you can do a post analysis. And you can just start out by, okay, what are the 10 worst trades that you had and the 10 best trades that you had? And just look at those and to get a kind of like a feeling of like, oh, these 10, trades that didn't work out for me. What was I doing something wrong? Was I buying in a down market? Was I really not buying tip-top stocks with the tip-top CANSLIM characteristics? Or maybe I bought too much of a position because maybe I got a little greedy and I was kind of going outside my risk tolerance, and it made me make a decision emotionally instead of based on rules. But you don't know the answers to any of this stuff. You don't keep records to begin with, because you've got to have something to look at to say, oh yeah, I remember that trade. I remember what I did there. But if you don't keep a record of what you did, how are you going to go back and look at all this stuff? You really got to keep a record of these trades because it's so helpful in your post analysis, fixing problems, and you'll see what you did good. Like, oh, you know what? I'm really good about taking a loss and getting back onto the stock when it goes to that pivot point again. A lot of people are aren't that, it's
I'm
not that
very
easy for
hesitant. I
you,
used to be
for you to
very
buy a
hesitant.
stock. Yeah.
Very,
Yeah.
very.
It's normal. Yeah. So certain people are going to be good at that. Certain people aren't going to be good at that. But it's okay. I mean, but this is the way you figure out what you're good at and what you're not good at. There are things that I thought I was good at and that I really wasn't good at. You always think, oh yeah, Steve, you're so disciplined. Oh, please. I've got no discipline. Oh, Steve, you're so patient. Oh no, I've got no patience. I mean, I had to develop these things because I wasn't naturally good at any of this stuff. I had to develop it over years. And I'm there's so many people out there who just are naturally patient. They're naturally disciplined. I've got trading friends of mine. They're very good traders. I've got a couple friends that are just naturally very patient. And I would marvel at how patient they were. And I was over here struggling, like, oh my gosh, when's this weekly chart going to ever finish completing? I can't wait until Friday. It's just, but for them, it was no big deal. It was like, okay, Friday, yeah, we'll take a look at the charts then. I'm over here thinking, oh, I got to look at every day. I got to look at every hour. But over time, you learn that you don't have to do all that stuff.
Awesome. Yeah. One of the things that I just wanted to go back to because for me, it stuck out at least is so my strategy screens, right? I run my screens very similar to you. The first thing I really just look at, and I forget who I got this actually from. It's from somebody from IBD. Um, am I in an uptrend and is there some sort of base, right? That's all I'm really looking for. But the problem I get from there is, right, I get my big list. And now, like, and this, just from this conversation, I'm going to have to do this. Like, I need a checklist because what I tend to do is then I just start saying, like, okay, what do I like out of this list? Well, that's such a broad, what do I like is very,
Yes,
very broad. And now, the next thing you
it's
know,
subjective.
I got a list and like yeah they all fit my criteria but like I'm not drawing lines in the sand like and then my list gets a little big and I spend so much time trying to trim my list down and it's so subjective where if I just gave myself like just okay here's your checklist it's a yes or a no and if it hits this amount of times it goes on your list I'd probably end up with the same list but it wouldn't take me 3 hours to go and keep trimming, and this. Oh, I don't like that.
Yeah.
Oh, I like this. I don't like that. Like just put some lines in the sand. So that's something I'm 100% gonna have to do because I think it'll speed up my weekend screening from that second tier of going from my my big list to my weekly list to then I go to like what I call my spotlight list. That spotlight list to get that spotlight list sometimes, man. Oh God, it takes hours sometimes. It's bad. Very bad. Very bad. Um, so one of the things Mac Money said, how do you identify trending sectors? How do you identify sector rotation on a 3 month basis? Some other sector is performing the best, but when you come down to a 1 month, there's another sector performing the best. So I guess you're saying, maybe like perfect example I would say right now, right? Maybe Bitcoin miners have been doing great for the last 3 6 months, well, pretty much a year. But now we're starting to see healthcare. All of a sudden, in the last month, they're starting to show that strength. So, how do you go about identifying where that strength is, and then within that time frame and that rotation, how does that play into, if it does play into your approach?
Well, I've got good news. I don't look at any of that stuff.
That's an easy answer.
I don't. Yeah, because really, what I do is, and that's the reason I sort. When I was talking earlier, when I sort my universe, I sort it by industry group first. So I'm always going to be looking at the stocks that have the highest industry group rank first, and so that's kind of if I prioritize anything based on industry group, it's because of that. I'll start with the strongest industry group first, and just go on down the list. But I'm a bottoms up guy. I'm looking at stocks. I'm individual stocks. If I've got individual stocks, and I'll see it. Well, gold is a good example. About I don't know 3 4 months ago, I was I was going through my list and I saw all these gold stocks that had strong prior uptrends, they had bases, they had the great earnings numbers, sales numbers. I didn't have to care. I didn't care that. Oh well, where was the sector at 3 months ago? Where is it is now? I just say, hey, there's a bunch of growth stocks that are setting up. Which ones are the leaders? And maybe I need to take a shot at those. And believe me, I make things so simple. I don't. You'd be amazed how much stuff I don't look at. What I just pretty much explained tonight, That's it. I don't do anything. I'm telling you, I do not. I don't look at. I don't look at sectors. I don't. I mean, and even these industry groups. Yeah, I've got them ranked from one all the way down. But it's not like, oh, I got to look at the paper. Where was that industry group 3 months ago? Where was it 6 months ago? I don't even care. If the stocks are set up, if they, if I can answer 4 of those questions, at least 3 of those 4 questions with yes, then it's just a matter. And one thing also, the way I've got it sorted, my universe with industry group and then relative strength rating and then composite rating, it's pretty much giving me the leaders on the top for each industry group
every time.
So yeah, every time. So I don't. It's not like even with the gold miners. I remember gold miners going through my universe. There might have been 20 something stocks that came through my screening. I don't want to. I don't need to look at 20 of them. I really only have to look at as maybe the top 3 or 4, maybe 5. Because after the first top 5, if I don't see any buys there, why do I want to buy stock number 10? If I really want to be on gold, I need to be in one of those top 3 or 4 stocks. I don't need to be in stock number 10. And that was kind of piggybacks to what I was saying at the very beginning. One of my problems was I was missing the leader. I'd buy like the second or third best stock, and the leader would always escape me. And I'd learned over time that if I don't get the top 1, 2, 3, or 4, I'm not wasting my time with 5, 6, 7, and 8. I'm just moving on to something else. The question is about industry group. I'm sorting it by the industry group rank that comes from IBD. That's how I do it.
I think I want to say that's 6 months is what they base the rank on. I'm not. You know what? I know you can just Google it and it tells you exact. Because I know like Chad who's asking the question. I know because he's using Deepvue and there's different time frames. So I think you could just look. IBD tells you what their rank is based on, what time frame.
Yeah.
But what I also like too about what you're doing, and I've started sorting this way, and it might have been from you telling me this at some point. Actually, maybe it was from one of your interviews, but you're also getting that feel because you're looking at let's say all the semiconductors, and then you're looking at maybe all the software stocks all in one. It's very easy to say like, oh, I just saw 7 setups in a row all in the same group. And it automatically your head says, okay, well, this group is really strong. And then you go to another and it's like, okay, I only have 1 setup in this, 1 setup in that. Oh, gold. Oh, I have 8 setups in gold. Like it stands out so much when you screen that way. So what I'm seeing a lot about at least how you're doing things is like you can complicate these things very, very much. And you can look at this metric, this metric, that indicator, this way to look at this. But if you just find a way to organize yourself properly, find a way to put those checklists together, like you're looking at the same, you're still following the same CANSLIM criteria, but it's happening almost, I don't want to say automatically because there's a lot of work that goes behind it, but it's just making it more seamless in the way that you're coming to that conclusion is at least how I'm seeing it, which is very, very interesting.
I think you said it perfectly. That's exactly what it is. Exactly. Just like you said. And it's amazing you do that. And it does. It's just, the gold example was a great example. Chips was a good example. Even like when Credo and A-Lab were breaking out, this is months ago, they were doing it together. I mean, it was just like everything. It was just right there, right? It was just slapping you in the face.
I had those charts up next to each other, and I'm going like this. I'm like, oh god, which one? This one? That one? This one? And I'm like, which one do I want to buy? And I think one of them broke out first. Either Credo or A-Lab broke out first. The other one lagged behind a little bit, so that's the one I ended up getting in first. But yeah, and like you said, it's funny because you see them together, this whole group, and everybody doing the same setups and things.
And it's funny too when you're seeing the fundamentals. It's almost, and I get this feeling too. Your eyes get big when I saw Credo's quarterly results, their growth from their sales and their earnings. It was like you see all these triple digits. I'm thinking, wow! It's just like it hits you. It's like these are excellent fundamentals. You look at Reddit, you look at A-Lab. These are amazing fundamentals. Triple digit earnings growth, triple digit sales growth. Look at Palantir, all this liquidity, It's got, it's in the AI. It's got, all Reddit's a household
Just like,
name.
whoosh.
Spotify was another one. Yeah, exactly, exactly. It's like what else is there to not? I mean, come on, these are it. And Nvidia for years. I mean, what is there to miss? It's got everything.
Yeah,
And so when you see that, and you see because you go through a chart. Oh yeah, that's pretty good. 30% earnings growth. Okay, sales growth about 20%. Okay, but it doesn't like really perk your ears up. Like wow, this stock is amazing. But when you see stocks like Reddit, and that's why I think the stocks this year and last year have been easier to pick because the growth rates have been just they've been so extraordinary. It's like how can you miss them? They're so good.
yeah. It's I always use my example, and uh, my old mentor used to joke around me all the time because he's like, "This was when you found this name is the most annoying name you've ever found because you wouldn't shut up about it." When I found Zoom, and Zoom's earnings and sales and everything were just so good, and I'm like, "What is it?" I
Yes.
didn't know I didn't know what they were at the first time I found them. Like, what the hell does Zoom Communications do? Like, they're making so much freaking money. And I had looked into it, then I found out what they did, so I pulled a couple friends just to figure out, I'm like, is this company even use, like, what the hell do they do? And they're like, oh yeah, we use it at work to meetings and stuff. And I was just like, I'm like, I don't know what this Skype wannabe is doing, but they're making a hell of a ton of money, and I need to buy it. And I completely blew it because it broke out before the uptrend in 2020. But like you said, it was one of those where I'm like, spacebar, spacebar, spacebar. What the
Yeah.
hell is this? And it's something I think I got to remind myself of too. Again, in that screening process, you're like, ooh, is this one? Is it like you're like constantly scratching, trying to find something. Meanwhile, it's like as your hands are going through the sand, like you're gonna feel that buried treasure when you hit it. You don't have to sit there
Yeah.
picking up every little pebble. You're gonna feel that big box all of a sudden, like, oh, I need to look at this.
Yes.
This is important.
Yes. Exactly. Yep. You said it perfectly.
Let's see what else we got here. This was so just finishing the rest of this one. He said, I'm a swing trader, hold position for 20, 30 days. I'm literally confused which performance to look for. Basically, I want to ask, how do I spot strong? Okay, so that's just following up the strong. So you kind of answered that already. Um, what else do we got here? Oh, there was a question earlier actually based on CANSLIM from a defensive side. I think I know how you're going to answer this, but like when the market's in a downtrend, I know they do have the how to make money in stocks, short selling. Is there anything else that you would say from like the defensive side when the market's on the downtrend, or for you it's just I'm in cash and I'm waiting?
Yeah. For the most part, it's me in cash and I'm waiting. What I will do is sometimes I'll try to short the uh, ETFs as a swing trade. I mean, I'll do it, but I don't do this off. I mean, if I've got, say, I have $100,000 portfolio, at the most, at the very most, I'll put 20% in on the short side, and the other 80% is in cash. And I don't, and like I said, this 20%, I don't do that often, and because my thing is, if I'm focused on the short side, it's hard, and this is a weakness of mine. This is something I learned. I thought, oh yeah, I can just switch from being short to being
Flip.
long, no problem. I'm not. It takes. I've got to be like my mindset has to be thinking, okay, uh, I got to be ready to get long when I start seeing those setups, and my mind will play tricks on me because if I'm short, it's like it's harder for me to reorganize my mind to start thinking long again. Now, some people don't have that problem, but I do. So, see, this is a weakness of mine, and so I have to. So that's just how I approach the market. I'd rather just be in cash and look for long opportunities. And I'm gonna tell you, not doing anything. I know it sounds like the easiest thing to do. Oh, I'm just not going to do anything. Oh my goodness, it's the hardest thing to do because you feel like you've got to do something every day. You got to. The best traders that I know, what made me a better trader is my ability to not do anything, to wait, because nobody wants to do that. Nobody wants to wait. And they go on Reddit and they see, oh, so and so's. I just doubled my money in this Bitcoin. Oh, I just doubled my money in SanDisk. Oh, I just did this. I just did that. I don't care what they do. Uh, they're not trading me. I'm trading me. And so
Hello?
I've got to do what, I've got to follow my rules. I've got to wait and just wait and wait. And if it means me waiting months before I make a trade, then so be it. I'll wait months. It's not a problem for me. I can do that.
Yeah. Now, when you get from that 20 to 30 stocks, and now you're filtering down to, like you said, 6 to 8 stocks is your max that you'd ever buy.
Yeah.
So
Yeah.
obviously, every week you're not making a ton of trades, especially because the weekly charts. But so, are you just making trades off of what happens first, like what gives you that first trigger, or do you have like a pecking order of like something could trigger on that list, and you're like, I'm gonna wait for this. Like, how do you pick between those 20 names, 30 names to what you buy on, even if there's a alert or something that gets told to, hey, this is breaking out type of thing?
Well, like those 20 or 30 names that I get down to, those 20 or 30 names, I'd say, of the 30, I would say maybe 20 to 25. They're in a base building stage, but they haven't built, they're not ready to form a pivot point that I can use to buy from. They're just in the middle of creating a base. And so those 20 out of, say, well, maybe 25 out of 30, I don't have to do anything with because they're just still in their base building stage. I'm capturing them because since they are base building, I know any day during that week, maybe they will form a handle. Maybe on by Monday, they've created maybe the first day of the handle. Well, I want that handle to be 3 or 4 days. So, but maybe by Thursday, the handle will be there. Or maybe by Thursday, the market, the stock gets crushed and I don't have to worry about it anyway. So so even out of those 30 stocks, there might be 5 that are like ready to buy because I see a trading range, a setup has formed. I see a pivot point. I know where I want to put my stop, which is within 7 to 8% of my pivot point, and it's all there. I might see that maybe 2 or 3 stocks, maybe 5. And then even out of those stocks, then it's kind of like when you're talking about a pecking order. All right, of these 5 stocks, which ones have the really strong, which ones can I answer yes to 4 out of those 4 questions? Not 3 out of those 4, but 4 out of those 4 questions. So that gets pecking order number 1. If I can answer 4 out of 4, answer yes to 4 out of those 4 questions that I mentioned earlier, then they're at the top. They're like my A plus stocks. The ones that are 3 out of 4, they're like my A minus stocks. So I'm gonna go for the A plus stocks for the ones I can answer 4 out of 4, answer yes to 4 of those 4 questions. And I'm gonna tell you, there's not going to be that many. That I might be down to 2, and then it's just a matter of, like you were saying, Bobby, whichever one breaks out first is the one I'm getting.
Okay.
It kind of goes like that. The way my pecking order works is the stocks that I can answer yes out of 4 of those 4 questions, top of the list, and then to narrow it down even further, then it's just whatever stock breaks out first.
Cool, makes sense. And it was asked, do you trade anything besides CANSLIM names? I know you did mention the rarer occasion on the short side, the ETF, but anything else, like you said, like Mag 7, ETFs, or anything other than that, just CANSLIM?
I just trade CANSLIM. I mean, that's what's made me money and has allowed me to live the way I live. So I don't go away from it. I mean, that's all. It's all I know. I don't really know anything. I don't know anything about options. I don't know anything. I don't know futures. I see the NASDAQ futures. I know that's up or down, but I wouldn't know how to trade those things. I'd lose money.
Yeah.
I would lose money trading options. I would lose money trading most of those 2x leveraged Teslas. I know people do that. They do
nowadays.
Well. Yeah, there's gonna be a 5x. They're coming out with 5x. I said, is 2x not bad? 3x is not enough. You gotta do 5x. So I try to keep things so simple and try to just go with, okay, I'm gonna focus on CANSLIM stocks. Believe me, it's a Bruce Lee quote, and I love it. Bruce Lee would say, I fear the man who has practiced one kick 1,000 times, not the man who has practiced 1,000 kicks one time.
Yeah.
So the whole point is be so good at this is my attitude. Be so good at CANSLIM. Know everything there is to know about it. Know it so well. The method, how it works, the weaknesses of the method. I mean, not every method's going to make you money every day. Um, but understand this so well and know it so well, because I'm gonna tell you, if you know any method, whether it's CANSLIM or something else, if you know it so well, you'll have so much confidence in it, because you'll get slapped across the face. I'll take 3 losing trades in a row, and I don't, I'm not the guy who's gonna say, "Ooh, should I take that 4th trade?" I don't know, man. I've already lost 3 times in a row. But I've got such confidence in my rules and how I approach CANSLIM, on how the CANSLIM methodology works. I've been through good times, been through bad times. I've been through all kinds of crazy markets and I've seen it work differently in different markets. So I've seen all this stuff. So it doesn't, so I don't do anything else. I just say, okay, this is what I know. So this is what I'm going to do. And I can make money on CANSLIM. I don't think I can make money on anything else, but I know I can make money in CANSLIM. So why should I do anything else?
Mm-hmm. Yeah, and it's one of the things that I always try to tell people too when you're starting out. I know first trying to find a strategy, right? If you're aware of the markets and you're seeing all this stuff and you're like, where do what's lane do I go in? I know that's difficult. Um, so I say do some research. But when you do find something, and let's say you settle in on CANSLIM, that's why I tell everybody. I'm like, just stick to it for like at least a couple years, at least enough to see a couple of those different markets, at least to see those experiences, see how things work when they don't work, and just be like, you almost have to have blind faith, which is something that I had in the beginning, which it was just blind faith, because I was like, I've seen other people make money in this. Yeah, I see these IBD people, I see Minervini and all these guys who come from this background. I'm like, I'm just have blind faith and just trust this is going to work out. I had like a 45% drawdown. I'm like, I screwed up. I'm just going to keep trying to figure it out. And then when you go through those markets, those lessons that you learn, things make more sense when they start to come around again and again and again. And it's like, you almost, part of trading is you have to experience certain things to really truly understand it. As much as we study and read and everything, sometimes until it's happening in front of you, it's very, very difficult.
Yeah. Yeah, it really is.
Um,
Yeah.
One of the other things that I just wanted to highlight too, that I'm realizing a lot about what you do is, I struggle with this personally, right? You tend to see a lot of people, mostly, I'm going to say I'm a perfect example. And we want to, you have that fear that you're missing something, right? I'm missing a stock. I'm missing a setup. I'm missing an industry. I'm missing this. Like, I, I got to try to look everywhere because there's something I'm missing. Where the way I see that, how you are, is it's like, uh, it comes to me. It gets presented. I have everything laid out. It sits in front of me. This is what I deal with. I'm not worried about anything outside of what's in front of me. I'm not worried about anything outside of my screens. I'm not worried anything outside of here. I'm not worried anything outside of my checklist. This is my pool of stocks, these names, and this is all I'm worried about. I don't care what somebody's posting on Reddit. I don't care what somebody's posting in Discord. This is the stocks that I'm worried about that meets my criteria, and this is what I'm focused on. Uh, and that's something I think that I need to start getting a little bit uh, better with, is not feeling like I have some screens I run during the daily, and just from this conversation, I'm realizing, like, how many stocks do I actually get off of my daily screens, versus my stuff that I'm doing on the weekend, and just trying casting so many nets where if you just put that one net out there, pulled it in, and just dealt with what came in on that one net, it's just being more focused. So. Uh,
Yeah, I agree, and I do. I mean, I miss stuff all the time. Well, the stock I just bought, Lumentum. I mean, I bought it now, but where was I when it was trading at $60? I mean, it's trading at 160 now. So I mean, that's okay. I missed that one, but I didn't miss Credo. I didn't miss Alab. I didn't miss Reddit. I didn't miss Palantir. But I missed Lumentum. I missed Bloom Energy. That was another one that did great. I'm on the sidelines on that stock. So I mean, I've I'm only going to own six or eight stocks anyway. Well, there's going to be a lot more than 6 or 8 stocks that make incredible moves. So I'm going to miss a bunch of stocks. I remember, how EIBD at the end of the year, they'd always do their top 100 list, the top 100 performers. But a lot of those stocks were biotech stocks. Man, I was never going to buy those stocks. They had no sales, no earnings, but maybe they got taken over by somebody, or they had some blockbuster drug that did all of a sudden, the stock went from $40 to $80 in one day and all this kind of stuff. That doesn't bother me that I didn't buy those stocks because they didn't have the earnings growth, they didn't have the sales growth. Okay, maybe they had the new, but they didn't have maybe the liquidity. They didn't have. I couldn't answer three yes to 3 out of those 4 questions. So, I mean, they didn't really have a base. They just jumped out because hey, they had some great drug trial or discovery or something like that. So I mean, I miss those all the time, but that doesn't bother me. I mean, the only thing that would bother me is I've got a stock like so we'll say Reddit, and I didn't follow my rule, or that's the kind of thing. If I miss something that was completely under my control that I missed, that's a problem, and I still make mistakes like that. I and I try. It's a never ending learning. It's a never ending learning process. I'm always making mistakes when I do post analysis this year. In fact, I'll say this: the years when I do my best is actually the years I make my biggest mistakes. It's easy to trade 2022 for me because I take a loss, okay, cut it at 7%. That's an easy rule to follow. Took another loss, okay, cut that one at 7%. Okay, so far I'm trading like my trading's A+. I'm taking losses. I'm following my rules exactly. I'm super disciplined. I follow my rules exactly. It's like, okay, what's the problem? The problem is a year that's really good. Oh, I misjudged that Appleoven climax top, so I sold at I'm just throwing out numbers at 200, and then went to 250. Well, was there something in my analysis that I missed, or or maybe I misjudged? I didn't analyze the base correctly, and I don't know. There's all kinds of other things that I could have done better, in a good market. It's just, I did good here, but I could have done so much better. And I remember Bill O'Neill saying one time, he says the biggest mistake is not so much taking losses. Hey, everybody does that. What's the big deal? It's the not handling a big winner correctly. And that's where I have lost more money not handling a big winner correctly than I ever did taking a loss here, these little 3%, 4%, 5% losses. I've lost. I've I've left a lot more on the table not handling a big winner correctly. Maybe my position size, I didn't add on where I should have. I didn't grow my position size as big as I should have. All those kinds of things I've made mistakes doing that had cost me more money than ever taking some little piddly 4 or 5% loss.
It's crazy. Just hearing you say that's crazy because, like, it just hit me where I'm like, I don't think of that. Like, like, why don't I think of that way? Because I take a loss and I think, okay, loss, 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 and I have a couple of things that trades I've got shaken out of that I just didn't. I not saying like I know we're not for people thinking this. I know I'm not going to buy, catch the top. I know we're not going to catch the bottom. I'm not saying that, but when my rules should have kept me in something, and I violated my rule and it pushed me out of it, and that was 100%, like you said, in my control, my fault that got me out. Like, why do I not think about that when I see that stock go up and then I see where I would have ended up selling later on? I don't look at that as a loss. I don't look at that as money that I threw out the window. Where if I probably did think of it that way, I I personally think I would be a little bit more inclined to uh, really, really like evaluate some of these situations where not just going like, I handled that poorly. It's like, oh no, I gave up, another 20% on something that I should never have. Like that's almost like that's a 20% loss. If I put that in my head, I think I would dial in a little bit more on when I violated those rules and how can I prevent that from happening again. I've never thought of somebody thinking about that way, and I think it's just crazy that as traders we think about the actual loss as a loss, and then we think about we violate a rule and it cost us money, but we just like I did something stupid, but not thinking about the money that was lost in the act of taking that stupid move.
Yeah. And it hit me especially when I was doing my post analysis, because my post analysis I'd mark where I bought the stock, where I sold the stock. I thought, well, that's great. I sold the stock at 200 and I was trading at 400. Now, why did I really sell that stock at 200? Was I scared that day? Maybe
Mhm.
I thought, oh, well, I've taken these three losses. I just want to take a 20% gain. Not because a rule says to take 20% gain, just because I just took these losses. So I just wanted to sell something just to make some money to kind of even things out. But that wasn't what the rule said. The rule says, hey, you hold it. It was my best performing stock. I should have held it 8 weeks. After 8 weeks, then maybe my rule would have said, oh, put a backstop at, say, a 20% gain, hold it until it breaks the 10-week moving average, we'll say. And then that would have led, if I would have done that rule, then maybe I wouldn't have gotten out until 400. Well, my goodness, I just left $200 per share on the table. Here I go and I buy $100 stock and sell it for 93. Big deal. $7. $7 versus 200. I
It's a
mean,
big
like, oh
difference.
man, yeah. I was like, and the 200, I'd had much bigger position in that stock because I'd been doing add-ons and all that kind of stuff. And the stock that I lost the 7% on, it would have just been like a B1. I doubt I'd have had a B1 and a B2. I just had a B1, so I wouldn't even lost 7% of a full position. I'd lose even less than that. So, yeah, I completely agree with you.
This is a good question because I've seen a lot more people talking about this lately with CANSLIM. Do you look at earnings estimates and then also revisions? Like, do estimates play
Oh
into
yeah,
your strategy? Because yeah, I
yes,
see a lot of people talking
very
about.
much. Yes, very much so. In fact, I'll go when I'm getting down to my 40 stocks. One of the uh, internet sites that I have up is Yahoo Finance, and I go to the analysis. Uh, I guess the option, and it'll show you the history of their earnings revisions, and it'll show you their earnings beats. And I was talking earlier about how I dump all the market surge data into a Excel spreadsheet. Well, there's some other data that I dump from Zacks Research. It's free, and the the data that I dump has to do with earnings revisions and earnings estimates. So I'm very much look at those things when I'm trying to figure out what stock to buy.
Okay, cool. And is it more? I guess for myself, um, you want to see like what do you I guess want to see specifically within those estimates? Because like I see it come up all the time. I see the estimates. I want to see that they're estimating growth, and if I see revisions, I want to see them revising up for those estimates. Is there anything other things that you're looking in particular with that?
No, really, it's just like you said. I'm looking at just seeing that over the last, say, 60 to 90 days, at their estimate for earnings is higher than it was, say, 60 or 90 days ago. And the greater the difference, the better. So, if it went up from, say, 80, we'll say 60 days ago, they thought stock ABC was going to earn $1.61. And then now it's going to earn $1.63. Yeah, 2 cents. That's that big of a deal. But if you had another stock that 30 days ago they were earning $1.61, and all of a sudden now it's $1.71. Oh, 10 cents. That's a bigger change. So I like that even better. And then as far as the earnings estimates, and to be honest, I say CANSLIM. I'm actually a CANSLIM uh, trader. I was actually talking to somebody about this before, and the E stands for estimates, because I really do. I think estimates are extremely important, and I think a stock that can beat its estimates and beat it by a wider percentage each quarter is even stronger. And I even got that Amy Smith. Her and I, we were talking one time, and she was telling me that she had done some research, and she not only looks for acceleration in earnings and sales growth, she looks for acceleration in earning surprises, that percentage.
Hmm.
And so you can see Yahoo, in those acts, you can see it there too. But that's something that I look at.
Yeah, because I guess
Yeah,
you're seeing like okay, it beat by 10%, it beat by 12%, it beat by 15%, it beat by 20%,
yeah.
and you're
See,
seeing that
exactly.
acceleration in the
Yeah,
earnings beat as
exactly.
well. That's pretty cool. Yeah,
Yeah,
because Duck's
Duck,
saying he said it's
look,
a
yeah, Yeah, NVIDIA. I remember NVIDIA back in 2016. I remember this so well because I played it so badly that the earnings. I mean, you look at the earnings growth and you're thinking, why would I be interested in this stock? Its earnings growth is only like, I don't know, 10%. The sales growth was like 6%. But they were beating their earnings estimates by like over 50%. I mean, they were crushing it. And I'm thinking, whoa, these analysts, whatever they're smoking, they don't understand
They're
what
far
Nvidia
off.
is getting. I don't know what they're doing. They're going to get fired from their job because they're nowhere close to what they don't understand what Nvidia is getting into because they're using their chips to mine cryptocurrency. They were using, and then of course the chips got into AI and all this kind of stuff. Says they don't even understand what Nvidia is getting ready to do, and they kept just Nvidia just kept crushing those earnings estimates quarter after quarter. And it's like, guys, where are you at? I mean, do you not see what's happening here?
Yeah, it's crazy because you could just see like, and that's one of those perfect examples how everybody wants to see what are the analysts saying, what are the analysts saying. Sometimes the analysts have so far off the pulse of what's actually going on.
Yeah. Yep.
um,
They were with
let's
Nvidia.
no. Um, and I don't know how you are on time, so I don't want to take too much of your time. There's so
Oh
much
no, I'm
stuff in here.
fine.
Okay,
Yeah,
I'll
not give me some
go through
more.
a couple of these. All right. Let's see what we got. This one's kind of I think I know how you like. So what setups do you find your best success in? Like pattern wise, I guess.
I tell you the stocks that I've made the most money in are EP or earnings gaps out of basis, like out of early stage basis. If I see it um, with it was I was going to say I know I did this with A Lab, but A Lab, yeah, A Lab it'll have a base and it'll go sideways, and then it'll finally break out to like in A Lab's case, it broke out above like 147 on the earnings report. But when you got a stock that forms a long base and it breaks out on the earnings report with huge volume, the volume's going to be there. If it's earnings report, volume's going to be there. If it breaks out on the earnings report of a long base, I'm almost always going to. I mean, and it's got of course all the other stuff. The CANSLIM, the great earnings growth, great sales growth, great liquidity. I can answer yes to those questions. Then if I see an earnings gap out of a base, especially like a first stage base, oh my gosh, that's if I could only trade one setup, that would be it.
Now, because you're having that gap up for you, is your stop just a risk stop, or is there another area like technically that you place a stop on an earnings gap like that?
On an earnings gap, what I'll do is I'll try to buy it within the previous day's close. So like within say 10%. So I want to be able to put my stop because if it's a real earnings gap, it shouldn't close. That gap should not fill. And now if it's a now if it's an earnings gap that with earnings and this stock's getting ready to explode, that stock should not fill that gap. And so I want to put my stop uh, like at the previous day's close because if it hits the previous day's close, that means the gap got filled and trade's no good. Sometimes what I'll do is I'll take the low of the gap up day and just put a stop. Say when it gaps up, it's too far away. If I put my stop at the previous day's close, maybe I'm risking 20% because it's gapped up so much. So I can't. So okay, well, what's my other choice? My other choice is I take that gap up low day and I'll put the stop like 2% below that low instead of the previous day's close. So that's the ways where I'll handle how I handle earnings gaps, where I put my stops.
And now, if that exceeds that 7 to 8% point, or you don't want to buy that far off of that, like what if it
Oh, I'll
was too far off of that?
it won't. I won't. I mean, no. It'll have to be within 7 or 8%. It's
Okay.
got to be. Sometimes I've done sometimes. I'll go as high as 10%, and then I'll just reduce my size, so my overall
Portfolio
risk to my
risk.
equity. Yeah, right, exactly. So I have done that, but that's just usually I can find, because I'll start buying in after hours trading. So I'm already, uh, when I see something like that, and I know I'm ready. I actually thought Tesla didn't do it, but I was actually waiting. Tesla would have been one. The only problem with Tesla was I wasn't going to buy it yet until I saw the earnings, because the earnings aren't that, they're not excellent. They're not meeting the excellent fundamentals criteria.
Never.
So they had to no. So my thing is, well, maybe if the earnings were extraordinary when they came out with the earnings report last week, or then maybe that would have been the
Catalyst.
catalyst. So okay, now, oh yeah, now it's got the good earnings, and then looking at their forward guidance, the estimates, like right now it's 36%. Well, it was 40%, so it's going from 40 to 36. But like if the earnings would have gone, say, up to 50 or 60%, going the other way, been revised upward, 50, 60% for that size company to grow their earnings at that kind of rate, that's pretty good. That's strong. And then if the current quarter, like I said, if they would have showed like earnings growth of 100% or 80% or something like that, and it's sales growth like 20%, but they didn't do anything near those numbers. So I said, forget about it. I'm not buying any of it. But that would have been one if it could have, like, because I was looking at like if it could have gapped above, say, 470, but it didn't do any of that. It just, so I was watching it after hours, and it didn't do any of that stuff. So I said, well, I'm moving on to something else.
Yeah. Yeah. So because of these names that they're like, like when that after hours gap up, that report comes in, it's you already know you're interested, so that's why you're willing to just, you see the
Yeah,
reaction and you're ready to kind of go. So you don't
yeah.
have to. Sorry, go ahead.
I was gonna say I've got a little method for after hours trading where I'll wait for I got to see a thrust up to begin with, and then once I see a thrust up, if it's like a thrust up and it goes through a pivot point, then at the very high, as soon as that thrust up, I'll be looking at 1 minute. Well, I'll look at 1 minute charts if they're very, very liquid stocks. That's mainly the only ones I'll trade in after hours trading. But if that 1 minute bar is wide and it's got volume and it closes at the tippy top, the peak of that range, and it goes through a pivot point, then I'll start buying right there. I'll put a limit order in and start trying to catch it. If it's a stock that is already above the pivot point, then I've got to wait for it to pull back intraday and then find a little pivot point in the after hours trading. And if it breaks through that pivot point, then I'll start buying. But that's pretty much the way I handle after hours trading. But it's harder to explain, than to see it. You have to see the chart. But if you just kind of imagine it in your mind's eye, you've got a stock that's going through a base, and say the pivot point of that base is $110. And before the earnings report came out, it closed at 108. Earnings report comes out, and immediately it just shoots up right through 110. And maybe after that first minute, it's at 112. I'll start buying at 112. And then there was same situation where you got a stock at the same pivot point, 110. But by the time, uh, you know, when the earnings comes out, I mean, it's already, say 120. It's already 10 points above the 110 pivot point. Then what I've got to do is I've got to wait for that stock to pull back in after hours trading. Say it goes from 120, pulls back to maybe 115, and then it goes through 120 again. Then I buy it like at 121, and I'll put my stop, like below 115.
Using that
That'll be
parallel.
one. Yep. I'll do that. And so that's the kind of way how I handle these stocks. But I'm not recommending it for anybody here.
It's just
I've been
how
doing
you
this for
do
a
it.
long time.
Yeah.
That's how I do it. And I would say, if you want to just look at it yourself, just most all these Thinkorswim or Charles Schwab, any of these brokers, they got afterwards. And I would just say, interested in, just look, don't trade them, just look at the activity, how they trade in after hours trading. Look at those thrusts, and look at those bases, and look at the pullbacks, and just look at, and you might come up with rules that are better than my rules, ones that fit you better. But I'm just telling these are the rules that work for me.
Yeah. Cool. Let's see what else. That answers that. This is actually a fun one. So if you were starting from scratch today, it says what path would you follow? I'm assuming it's canceling, but is there anything else that like you would have changed about your learning process? Like, I guess the way I would phrase this is there something that you would go back and adjust how you learned in the beginning or how you approach something in the beginning in your process to learn how to trade that you think would have made
Yes,
things easier or sped up for you?
absolutely. This is something that you guys have that I did not have back in the late 1990s. You've got other people who've got experience in CANSLIM that you can ask questions to. Here I am. I'm this guy in Mississippi in late 1997, and nobody CANSLIM. What's that? It's like a diet drink or something like that. I mean, nobody knows what that. So I didn't have anybody. I had no mentors. I had no like other friends that I could just bounce off. Like, I read this. Is that how you understand this to be? And I didn't go to any workshops. I thought the dumbest mistake I ever made, I think, investment wise, was I remember back in the late 1990s, Bill O'Neill, and I think David Ryan was there too. They were doing some kind of workshop for like, I don't know, $800. I thought, I ain't wasting $800 on, going to one of these workshops. That was a dumb, I mean, he's only the greatest growth investor probably of our time. And it only cost me $800 to go to listen to this guy speak all day long. And then you got David Ryan there too. I mean, I just thought, my gosh, it would have not been okay just to find $800 somewhere. I mean, I was delivering pizzas at Pizza Inn at the time. I could have scrounged up $800, but I just didn't realize how important it was to go to these advanced workshops back then and learn from Bill O'Neill. And what really hit me was I finally went to a level 2 workshop in 2005. So mind you, this is 8 years after I started with CanSlim. Almost exactly 8 years because I started in November and I think the workshop was in November. It was in Hawaii. That's the reason I went
Oh,
to
that's
it
nice.
because exactly. I said, well, I've never been to Hawaii before. I'm gonna go to Hawaii. Plus, hey, I get to go to a level 2 workshop. Sounds cool. And so that level 2 workshop, exponentially, all the questions that I had, because all I did was read the book. I didn't have anybody to really ask these questions to. Finally, Scott O'Neill was there. And there was another portfolio manager, Wendy Bosch, a guy named Steve Birch, who used to, well, later on, he started managing all the portfolio managers for William O'Neill. But anyway, those guys were there, especially Scott O'Neill. And Scott O'Neill, I was so thankful to him. After the workshop was over with, I went on the stage where he was still standing and I started asking him questions. And he went through charts with me and he was showing me like things like, oh, this is the tight areas. This is where our portfolio managers were buying the stocks. I says, wow, this is the coolest thing. And he was telling me all this stuff and all these questions that I had, things I thought I understood, but I didn't understand. He taught me about the importance of the prior uptrend. He taught me about looking for tightness on the right-hand side of the chart to look for early buying opportunities. He taught me the importance of looking for sales growth. I always looked at earnings growth. That's what they teach you in the book. But he was telling me about, no, you've got to understand what is driving that earnings, what product, what service, what is growing those sales growth that is going to lead to those strong earnings growth numbers. And it was just like, wow. And when I got done listening to him and him showing me these charts, 2006 was my best year ever. Well, best year up to that time. And it was like, wow, I wish I would have gone to one of these workshops, say 5 years ago and maybe got to listen to Bill O'Neill himself. I mean, Scott's great too, his son, but I mean, who knows what, maybe it wouldn't have taken me so long because it took me 6 or 7 years, actually closer to 7 years to even like start to make money. I mean, I wasn't even making money for 7. I mean, how many people can go through 7 years doing this stuff and basically you're spinning your wheels. You're not going anywhere. And that's where I was. But I wanted to do this so badly. It's like, well, I've got a regular job, so it's not like I'm going to be destitute. I was a CPA. I was doing the accounting stuff. So I had a 9-to-5 job. So I had money coming in. But I just couldn't make any other money out of my trading because I just sucked. I mean, that's just the honest truth. I was not a very good trader. And like I said, didn't have discipline, didn't have patience, didn't have any of that stuff. And I didn't have anybody that I could bounce ideas off of. And finally, around that, when I went to that workshop, I was my Wyckoff mentor, super nice guy. He's passed away now, but I got with him and he started helping me learn how to read charts. And so it was just like, wow, this is great. I'm finally getting people who know a lot more than I do, who are a lot more successful than me, and they're teaching me this stuff. And it was just so nice of them to do that. And I was so thankful. But I wish, like I said, I wish I would have done that 6 or 7 years earlier instead of when I did.
Yeah. And I think that's one of the things too that I realized too, like with, I mean, half of these great traders and IBD, they're all pretty accessible. Like I always laugh because like Mike Webster, I shoot him a message anytime, and like every once in a while he'll get backlogged because he's traveling. I'll write a comment on something. Hey, I shot you a message. All right, I'll get to it. My bad. And he'll
Yeah,
answer.
yeah,
And we have the ability right now to have ask questions and have conversations with some people, and like it's like when you're by yourself, you're just in the fog. You're just sitting there, and you think you
yep,
know where you're going, but you're just in the fog. And then sometimes you need to just like shout out to have someone like shine the light in the other direction, be like, "Here, come over here. Let me show you the right way. This is what you
yeah,
really want to, where you want to, the direction you really want to be headed." Uh,
yep.
yeah, so then taking advantage of that stuff. I had a chance to go to one of just the trading summits when I first started trading, uh, and it was a very basic one, uh, and it was just still like you said, there were certain things that like you read, and I think Arusha Pierce was there, and he starts explaining. I think it was Chipotle, one of the Chipotle setups or something with Chipotle stock. I remember, and I'm just like, oh man, I just like certain things that I just didn't think about in analyzing in the pattern, and it was just like I was just looking because there's pattern rec. I'm like, did it break through the pivot, and him explaining like this is why this was such a great setup, and I was like, I didn't think about how there's different setups. There's great setups and there's poor setups. Like in my head, it was just like, oh, there's a setup. Does it look good? Buy it, type of thing, and there's so much information out there and so much we can all learn from them, and it's even people like
Yeah,
just what we're doing right now, even somebody
yeah.
like yourself, getting a chance to I mean, you've how many times have I said in this conversation, oh my god, I didn't think of that, or just things that opened my eyes that I know is going to help me focus in on some areas where I think I can make big improvements. So thank you.
Yeah, well, that's good. I mean, hopefully that's one of the great things about the internet. I mean, there's some bad things about it too, but one of the great things is the free flow of information has grown exponentially. I mean, there's, you know, you know, like you said, back in, I mean, the internet was just starting, back in the late 1990s, and there was certainly nothing like this going on back then. And it was, I was just like, you read it in the book, but you reading the book's one thing, but applying it in practice in real time, we got your emotions going on. You think, like the strong power uptrend. I only read it in the book probably 20 times, and it still didn't click until I went to the level 2 workshop, and it just it clicked all of a sudden. It's like, oh yeah, I need to focus on that. Tight areas. Yeah, I knew that tight areas was an important thing in a base, but so you're buying off the tight areas on the right hand side of the base. I see where you're getting in earlier than than I would have gotten in using the standard buy point. And you can use a sloping trend line. Oh, I didn't know that you could use a sloping trend line to get in. I didn't know any of that stuff. So it's just like, oh, okay. And then when he started telling me what the portfolio managers were doing, those guys are advanced. They know canceling backwards and forwards. And it's like, oh, that's how they're doing that. And that's how they're able to keep their losses even smaller than my 7 or 8%. They keep losses at 4 or 5%. So it was just like, oh, okay, I see now. I see what's going on. And a lot of things, another thing, with sell rules. You got your sell rules, Steve? Yeah, they're in the book. No, 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 no. I don't mean regurgitating what's in the book. You actually have to write down those sell rules yourself on a piece of paper that you can, when you're trading, you can open up that piece of paper, look at your rules, and see, that's how I need to address this situation. Oh, this is how I need to address this situation. I've got rules right here that I've written down. And then once I've addressed the situation, I need to be able to journalize that so I can come back in 3 months later or whenever and say, oh, okay, maybe I need to tweak this rule because, in your mind, you're thinking the rule says one thing, but in practice, it turns out to do something else. And it's just like, oh, you got to kind of get everything together, working together in harmony. And yeah, and a lot of that stuff's tedious. It's like, who wants to do post analysis? You don't make any money with post analysis. I want to trade, man. I want to hit that mouse button. I want to be buying and selling. I want to be doing all kind of fun stuff like that. And this tedious stuff like writing down rules and like studying a book and looking at post analysis, that's no fun. Well, I'll tell you, that's how you make money. That you learn that stuff, that mouse clicking stuff. The mouse clicking stuff's going to make you. It's going to lead to some good mouse clicking decisions, but you got to put in the hard work doing this, doing this other stuff. That it might sound tedious, but if you're really serious about making a living out of this, make a good living out of this stuff, then those are the kind of things that you got to do.
It goes right back to kind of what you said before earlier, where you're like, you got to take the courses, you got to do the work, you got to, you got to treat it like you're going to school, right? And
Yeah,
same approach you take to, like I always say, this is one of the things I say all the time. The same approach you take to any career in the world,
yeah,
you got to take to trading, right? You don't. Nobody walks
absolutely.
into an operating room is like, all right, I read a book, give me a scalpel. Like it's just not
Yeah,
how it
give me the
works.
scalpel, buddy.
Yeah, I read that book. I read that book. We're good. I know exactly where to put this
I'm
decision.
good, man.
Yeah,
Where's his leg at? I'm
yeah.
ready. I'm just cut away.
Yeah, like you got to read the book, take the courses, cut on a
Yeah,
cadaver, do this, do that. Like, and after years and years and years of practice, then you get the chance to get your first job. And even think I always say that too. It's like even after all the years of learning, you get that first job, and now you're learning in the job still, and it's just that constant evolution. And I always say it. And being an air traffic controller, like everybody always says, oh, your job's tough, and the training was like insane. The markets and learning how to trade the markets and everything is way more emotional. It is way more difficult to learn and takes so much more time to adapt to that. It's to me that's where I'm like this has to be one of the hardest and most difficult things to learn, especially because a lot of it all falls on you. It's not like you're going in. Your boss is like, hey, I need you to go, take this course, or hey, I need you to go sit down in this room and do this briefing, or go over these books, or go over these notes, or call this. Like it's all on you. And if you don't do the work, you're not gonna be able to make any money.
this is something. It kind of goes with what you were saying. This is something that Lee Tanner and I we were talking this years ago. We were talking, and he said something that really stuck with me, and I thought it helped me because I was telling him how I was struggling with my stock picking, and I hadn't come up with those 4 questions yet. And he said, "Well, Steve, this is the way I do stock picking. I go in and is it a stock that I'm willing to approach Bill O'Neill himself and say, hey, let's buy this stock? Are you willing to go up to Bill O'Neill, the greatest stock investor, and say, this, I think I want to buy some Reddit right here. And Bill's going to say, well, what's so good about Reddit? And you got to tell him. And, you start looking at these other stocks, these biotech stocks that don't make any money. I mean, if you went into Bill's office and try to approach him with some stock that loses money, that doesn't have anything going on, man, he'd kick you out of his office. I mean, and so I started thinking, I says, yeah, because like you said, that's one thing about when you're trading for yourself, you're your own boss. We can't really fire yourself. So you got to create some discipline within your routine. Because if I say, like, Monday, I think I'm gonna take the day off Monday. I ain't doing anything Monday. Well, who's going to tell? Who says I can't?
Yeah.
But I mean, but there's you guys. Okay, well, I do got to do this routine. Oh, I got to do this, got to do that. So there are certain things that you got to make yourself do because it is if you don't have any discipline, if you don't have any that kind of like a consistent routine, then it can. And if you don't have since you don't have a boss, you got to pretend like Bill O'Neill's your boss. And if you're going to buy this stock, you got to be able to explain to Bill O'Neill why are we putting this stock on our list, for our institutional customers, because that's one of the things that the portfolio managers would do for Bill.
Mhm.
But but yeah, you say, oh, well, if I got to explain this to Bill, maybe I don't want to pick this stock after all. Maybe it's not exactly the best stock I need to be buying. And so it does kind of make you improve your stock picking if you just pretend in your mind's eye, I've got to take this to Bill O'Neill and explain to him why I think this is a good stock to buy.
Yeah. All of a sudden, you find yourself walking to that office, and you turn around and go and sit back in your cubicle. Like, maybe not this one.
Yeah, I think I need some water. Where's that water fountain at?
All right. You know what? Let's see. I think this is a really good one to actually end off on. So it says, what seemingly unconnected things in life have you seen parallels to stock trading that have influenced or helped educate you within trading? Hopefully that makes kind of
Yeah,
sense.
I'll tell you two. Yeah, I'll tell you two things. One thing is, I always talk about being a tennis player. I've noticed that some of the best traders have some kind of athletic. They've done something athletic, either playing high school sports or college sports or whatever. And I think, and this is what I do this in tennis, and I do this in trading too. Is like in tennis, I'll play a match in my head. Like I'm getting ready to play like a state championship the next day, and I'll play the match in my head. When I'm hitting that volley, how does it feel? When I'm hitting my backhand, how does it feel? How's that ball come off the strings? I'm playing like points in my mind. My strategy, what I'm going to do. I'm going to serve. I'm going to volley, do things like that. Well, I do that. I've carried that into, and so the reason I do that is when you're actually in the moment, you don't feel that much stress because you've already played the match in your mind. So it's like, oh yeah, I'm just doing what my mind's already told me to do anyway. I'm already going through the motions. So I'm just, regurgitating what I've already thought through in my head. Well, take this to trading. That's one thing that helped me with Deep Seek. And I do this. I'll do this for Monday. I says, what happens if the market just crashes Monday? What are you going to do? What's your plan? What are you going to do? Think through what. All right, what stocks are you going to sell first? Do you have your stops in the right place? Do you have, start playing these things through your mind. If something, hey, what is Trump supposed to talk to that Chinese guy? Sometimes sometimes okay. What about if they punch each other in the nose? That would be funny.
Yeah,
but like, oh crap, my stock's going to get killed on Monday,
yeah.
And so I mean, but once you play that through your mind, it's like, okay, I've already played through my decision making process through my mind. So if it does come, which the chances of happening, well, what were the chances of Deep Sea happening? Low, but it happened.
Yeah.
But so I mean, I always play just these far fetched things in my mind. So I can prepare myself, because in your mind doesn't know the difference between the reality or fake. I mean, if you're playing through this in your mind, it thinks it's real. So when it comes Monday and say the stocks gap down big time, you've already played this process through your mind. Like, okay, I'm going to sell Credo first. If it breaks the 10-week moving average, there's big scary gap. Sell half your position. I'm just making up rules. But you're just playing through the scenario in your head, and you're just looking at your rule set and thinking, okay, based on this scenario, based on this rule set that I've got right in front of me, these written rules that I've got right in front of me, what exactly am I going to do Monday? And it could go the other way. What about the stock? Maybe they hug each other, Z and Trump, and they,
everything
and they invite and it gaps up, and it's like everybody's making so much money. Okay, is there any climax top rules? Is this an exhaustion gap? Is this? Do you have any stocks that are now on this gap up? Are they going to be 100% above their 200-day moving average? Are there going to be any other clues that might link you in to think that this might be some kind of climax top or something like that? Or maybe you got a stock that just gapped up and it's at the 20% profit goal. Are you going to take your profits now, or are you going to put tighten your stop and see how far it can go? But play these scenarios out in your head. So when it comes time, it's like, oh yeah, I already know what to do. I already played that scenario out in my head the night before, so I know what to do. And so that's one thing that I think, where like a tennis, like sports, you wouldn't think, what does tennis have to do with stock trading? Well, that's this mental process that you go through can be done both on an athletic field or athletic sport and also in trading. And then also, I will say one thing I go when you have something that's so much more important than stocks, like your family, in my case, God, I'm a Christian, things that are so much bigger than that. Who cares what you made, that you made money or lost money on a Monday? You got so much more important things going on in your life. So and then you become so grateful. I mean, I'm so grateful that I'm living in a country where there's so many people who are very poor, who are in poor, impoverished countries, who just have terrible lives. And I feel like I wake up every morning, it's like I can't believe I've won the lottery. I'm living in a country where I can do whatever I want. I've got, a very comfortable living. I've got my parents, my brother, my nieces, my nephews, my sister. I've got all these family members. I've got, I don't have to really worry about money ever. I don't have to. I've got all this free time if I want to take it. I'm so grateful. And I'm looking like to God and what, He's got in store for me, and it's all these and things like that. Your fear goes away because you don't think about like, what am I scared of?
Yeah.
I mean,
What's a
I got
deep
all this
sea
good
day?
stuff. What would I care that I'm okay? Big deal. All
Yeah.
7% on a stock. Big
Yeah.
deal. And like I ain't done that before 100 times, 100,000 times probably. But I mean, so you start thinking in big picture stuff. It's funny how your fear goes away. You're not scared. Okay, big deal. Deep sea happened and my stocks are getting killed. Big deal. I got way more important things than I'm down one day. Big deal. A lot of those stocks went up much higher than where, than what they were that day.
Yeah.
So, if you look at it from a big life perspective and be just so grateful with everything that you have, even small things. I'm grateful that, every day I can eat. I don't have to I'm not worried about where's my next meal coming from. I mean, I got it. I've got a roof over my head. I mean, how many people don't have a roof over their head? And or they're all kind of debt issues. I mean, I just think that when you look at life that way, then you don't have fear anymore. Like, oh, a losing trade. Oh, I'm scared because I did have a 20% gain. Now I'm down to a 5% gain. And I think one question was, how do you handle it mentally when you're up 25%? Well, your stock falls 25% from where it was. How do you handle stuff like that? Well, this is how I handle it. What do I mean, I'm just following my rules. I don't care. Okay, I've got a stock that fell 25%, but another thing to think about is if you picture this in your mind, you got a stock that you bought at $100 and it's going to 140. And say it wouldn't happen this way, but just in your mind's eye, like at a 45-degree angle, it goes from 100 to 145, just like a straight line, or we'll say 100 to 150. Wow, you're up 50%. Who wouldn't be happy about being up 50% on a stock? But look at it. What about if the stock started at 100, maybe it went to 180 and then came down to 150? Now you're still making 50% on your stock. But look how your mind plays tricks with you. You think, oh, yeah, but it was at 180. But hold on. You just told me earlier that you're happy that your stock went from 100 to 150 in a 45-degree angle, but now you're upset because it still went to 150. It just happened to go to 180 first and then got to 150. See, this is the ways that your mind can play tricks with you.
Yeah.
And this is why, if you're aware of this kind of thought process, then, you're not worried about, okay, was it 180? Big deal. I'm still happy because I'm up 50%. I'm grateful.
Yeah.
That's kind of how I handle that kind of thing. It's a mind game, a lot of mind
it's
stuff.
funny just when you keep saying mind game too, because I don't know if you saw, I mentioned I had a call with like a mental trading coach, and that's exactly what he said. He's like, we realize as traders, our mind plays games with us. Our mind, and this goes back to like Mark Douglas on, our mind is not designed to make money in the markets. We're basically, our way our mind is wired ends up doing the complete opposite if we follow just our natural emotions. And he's like, our
Yeah.
job as a trader is to find ways to play the opposite mind game, to like make things make sense in a way that we can profit from. we can play the opposite mind game. Like one of the things he was telling me, like I have an issue with, I try to hold everything for a home run, right? He's like, well, because you're always thinking about that big trade, that big winner you had. He's like, well, play the mind game with yourself. Have on an index card your breakdown of what your biggest wins, your smallest wins. Like create that macro picture of what your normal trading looks like for a couple of years, and you're going to be like, oh, it's a small percentage. Like, okay, put things into context. But if
Yeah.
you use regular life, things are a little bit more, things are a little more powerful when you, like I think about it right now, having my son this year, you know, to go, he was 6 weeks early, and it was like out of nowhere. It was really really rough at first because it was our first kid, so we had no clue what was going on. And like looking back on it, it was a whirlwind. We were selling our house 10 days later. It was
Oh
just,
wow.
oh, it was crazy. He
Like
was in the
going on.
NICU. We were selling our first house and moving on the same day. We were closing on both houses. It was just mayhem, mayhem. And I think about how stressed I was in that time period. And like to me right now, having this conversation, I'm like, I was in that hospital, and the only thing that mattered to me, like even the house wasn't, I was barely, I'm like, I just want this kid to come out of this hospital healthy. And he did. And he's healthy, and he's basically your normal, normal infant now. And it's like, you have those rough days in the market. And sometimes you just got to be like, what am I worried about? Because if I was sitting in that hospital like I was, now it's almost a year later, I could care less if I lost 50%. You know what I mean? I could care
That's
less if my
right.
whole account, I could care less if I logged in, somebody hacked my account. It didn't exist anymore. It wouldn't even be a thought in my mind. So what am I worried about about this stock? Pulled
Exactly.
back on the 21. I gave up 10% of my profit. And now I'm just closing it. Like, yeah, it's
Well,
great.
it'll be funny if you had a bad day in the market. All you got to do is go back to where your baby's crib and look at your son's face, and I'll put a smile on your face, and you won't
Yeah.
even care.
Yeah. It's so
It's a
true.
big deal. I lost money today. Look at my son. He's healthy. I can't believe I'm so grateful that I've
Yeah.
got such a wonderful son.
Yeah.
I mean, that's it's so much greater than any loss or whatever, even a gain. Who cares?
Yeah.
You got something so much more important, in that in that baby crib. I mean,
Yeah.
it puts everything into a perspective.
Yeah. Absolutely. All right. Looks like a couple people are popping
All right.
out. Any
Yeah, I guess we're
any
about done.
last words? Anything else you want to say, Steve, before we
I,
we head out?
yeah, yeah, I will. I'll say this to everybody. I'm gonna this is the honest, good to goodness truth, and I believe it with all of my heart that everybody in this room can do extremely well with CanSlim. I really believe that. Now, I'm not saying it's going to be easy, and I'm going to say that there's not going to be any bumps in the road, and I'm not going to say that there's going to be some years that you're thinking, man, this CanSlim, this system sucks. But that I will tell you, yeah, I go through those periods too. But the thing is, it's a system that has stood the test of time. I'm not the only one who makes. I mean, a lot of people make very good money using this system. Now we look at it, do it a little bit differently, maybe because we're different people. Everybody's different, but everybody, everybody here, you've got the tools, you've got the books, you've got a wonderful. You go to Bobby's site every day and ask Bobby questions. You can ask me questions. I'm usually lurking around every once in a while. I'm glad to answer them. I really am because I want everybody to make money. I want everybody to do good because I do. I think everybody has the capability to do great. Now I know our mind's going to play tricks with us. Our psychology is going to play tricks with us. We all, as individual people, we all have our own unique weaknesses and strengths. But everybody, I mean, that's okay. We all have that. But but I really do believe that if you really, I mean, just put your head down and focus on CanSlim and learn everything there is to know about it, then if it really, I mean, not, and I know CanSlim is not for everybody, but if it is for you, I really do believe if you really put your head to it, put the work in, that it can really pay off for you. And it might take a little while. It took me 6 or 7 years, but I really believe that if you really focus on it, do the post analysis, do the work, do the tedious work, that it can really pay off for you in the long run. And you'll be very happy that you made that decision.
Awesome, Steve. Can't thank you enough. This conversation. It's been a lot of fun for me. I can tell from just a lot of people in here. I'm sure everybody learned a lot. Um, so thank you, because like I said, I can't. I'm sure I'm gonna re-listen to this, and as many times as I've said, "Oh my God, I got something that I need to do. I need to do." I'm probably gonna dig up a couple more things that I gotta, you know, dial in, because I'm missing, gaps that I realize that got to be filled. So I can't thank you enough, and this has
Hey,
really been
look,
great.
I'm an old guy. I'll probably listen to it just so I remember what I said that night.
Great stuff. Well, again, thank
All
you
right.
so much. Thanks everybody. Honestly, the best part
Hey,
about this is these are questions from everybody in the community too. So like, thank you guys, because you guys
yeah.
made this too. A lot of these
Yep.
questions are just what you guys are coming up with, nothing I came up with. So
Seriously, I thought it was just going to be you and me signing into this thing, but I can't believe all these other people signed up too. I was like, wow, this is pretty cool.
yeah,
Like got 8 or 9 people here. That's amazing.
I think
I thought it
we
was going
might
to be
have
just
had.
you and me talking.
At one point, I think there might have been almost like 11 or 12. I missed the count,
Wow.
but
Oh, wow.
there was a lot of people in here, and a lot of the questions, like I said, from Discord, and then the chat was going off. And so honestly, there's names
Yeah.
in here that are just people I've never even know that they've been lurking in the background too. So you dug some people out of the woodworks for this one. All right,
He's like,
Steve.
what's that crazy country boy have to say tonight? Let me come in and see what he's got to say.
We got the guy from the country. We got the Long Island New Yorker. The two of them talking. This should be entertaining with these two accents.
Exactly. You're not kidding. All right,
uh,
man. Well, look, have a good night, Bobby. It was
you
great
too,
having you.
Steve.
Hey, you did a great thing putting this together, and I
No, thank
appreciate
you.
it.
Thank you. And yeah, enjoy the rest of the weekend, and we'll all talk soon.
Oh, definitely. See you, Bobby. See you,
See you.
everybody else.
See you guys.